This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial market. And this is a weekly review because today is Saturday. So what do we do as successful traders? We wake up early, we get the weekly review done, and we figure out what we did wrong, what we did right. So that's exactly what I did. The first thing that I did when I woke up this morning, and I'm now making this video later in the day, but I had my worst performing week yet. So why is that? First of all, let's talk about the position I'm in right now. I'm on the XFA, just passed the eval last week, last Thursday, but how I passed the eval has literally flipped my trading upside down because how I passed the eval was strictly focused on making money. Now all the decisions I make, I'm just purely focused on making money, and I'm demanding the market give me exactly what I do. But if we look at the balance, we can see that it is, shoot, that's a little too much. Negative $1,132.38. So I'm kind of close within the $2,000 max drawdown limit. But if I'm being honest, I still don't think I'm going to hit it because this is what I realized, sitting down today. I've been in many periods of drawdown before, and I've found my way out of them. Sure, I'm on a losing streak right now, but that's because I'm doing some things wrong, obviously, and I have an idea of what that is, and we'll cover that. But all I need to do is keep trading the way that I've been trading, because the way that I've been trading is still profitable. Although I'm in this huge period of drawdown, I'm still up $1,000 on the month. I closed the month profitable last month as well, and then the month before that as well. So what I'm doing is right, but it could be better. It could be better, and I could be more profitable. But I'm just in a period of drawdown right now, and I think that I may not need to take a break like I said I was in the last video. I still don't know. I haven't decided on that. I may just need to keep trading and just select the days that are high probability for me and avoid the days that aren't, because trying to trade every day, it's obviously not going to yield the outcome that I'm looking for, and that's what I've been doing this entire month. You can see last month, that wasn't really the case. This month, I'm trading damn near every single day. So, let's get into it. This is TradeZello. Everything that I do is out of TradeZello. All my systems, all my processes are integrated into TradeZello. So the first thing that I'm covering is performance stats. My net P&L is $516.72. R multiple, I am down 6.88 R. I'm down 6 times, almost 7 times what I've risked this week. And I did not take a single winning trade. Not a single winning trade taken, right? So I look at the baseline performance stats, and then I highlight some red flags. What from the statistics show me that I'm doing it wrong? Well, I didn't take a single winning trade, and I'm taking more trades. If I go into a session, I can't trust myself to not take 2 trades, which is the case, but this wasn't always the case. If I go to when I traded on a demo, which would be this account right here, Rebuild June 2025, and select that. If we go back to the start, June, you can see that I'm not trading every day, and I was profitable this month as well, not trading every day. And if you look at the amount of trades that I took, we have 1 trade, 2, 1, 1, 1, 2, 1, 1, 1, 2, 1, 2. But if we look how it looks this month, it's quite literally the opposite, where there's no gaps in the days that I'm trading. And it's either 2 trades or it's basically 2 trades every single day that I'm trading. 2 trade, 1 trade, 2, 2, 2, 2, 1, 1, 3, 3, 2, 2, 2, 4. So you can see that the amount that I'm trading is definitely increased, and that does not equate to more profits. It's actually the opposite. I'm realizing that the more that I trade, the less money I actually end up making. So I'll take 10 trades this week. That's more than usual. I can't trust myself to go into a session and not take 2 trades. So what I'm trying to figure out is when I get the bias incorrect, because that's when I'm going to have a bad day, and that's when I'm going to take 2 losing trades and be in and out after 2 trades, is if I get the bias incorrect, I trade in the wrong direction twice. And I've learned this as well. You guys know that I like to execute the order block, right? So one thing that I've noticed, studying my executions this week and looking under entries, I've learned how the order block allows me to be impulsive and how it works in tandem with the days I look for 930 sells or my bearish premium gap opening setup, which are days that I typically get the bias incorrect. Because I'm continuously hunting this setup, continuously hunting a 930 sell, and the order block allows me to execute on that because it's literally just a candle. So it's extremely readily available. I'm not even waiting for the formation of a gap. Literally just waiting for, if I'm bearish, I'm waiting for an up close candle to get overlapped by a down close candle, and that right there is a sell for me. Well, that doesn't take a lot for the market to do that, right? So the order block allows me to be very impulsive and trade very, very early. So that's something that's wrong with my executions. But in terms of trading more, I can't trust myself to go into a session and not take 2 losing trades. So I need to learn how to avoid stacking losses on days that I get the bias incorrect. On top of that, I'm not respecting the risk. I fall into a lot of drawdown, and this is because of what happened last week. Look at the drawdown. Let me remove the paper trading. I mean, look, I was in a lot of drawdown before, right? I worked my way out of it. And how long did that take, though? It took a really, really long time. From August all the way up to October. So it basically took me an entire month from the 19th of August to the 10th of October to get out of that drawdown. So, I could probably expect to do the same with the drawdown that I'm in right now. But that's in terms of dollar amount. Let's go in terms of our multiple, because on the paper trading account, I was trading minis instead of micros. So now let's see how long it took me to get out of drawdown. 828 to 916. Okay, so really, really not that long. Maybe a couple weeks, 3 weeks, and I can work out of the drawdown that I'm in. And I believe that I can, and I still have confidence in my ability to show up to the market and frame solid trade ideas, because I do that. And what I'm working on right now is I'm trying to track the days and establish a correlation between the days that I get bias correct and how I traded as a result. For instance, there's a lot of days where I got the bias correct, but I did not capitalize on the move that I planned for. There's a lot of days that I got bias correct, and I did. And there's a lot of days where I got the bias incorrect, and I just flat out took 2 losing trades and lost both. So there's a lot of studying that I'm doing right now to figure out what's going on in this period of drawdown. But I want you guys to think about how you should view your drawdown for a second, because I wouldn't be doing this extra work, and I wouldn't be motivated to do this extra work on a Saturday, on a weekend, if I wasn't in this huge period of drawdowns. So if you really think about it, your failures, your mistakes, periods of drawdown, they are actually blessings in disguise. Every failure carries with it an equivalency to success, meaning if I have fallen on my face this week, well, that means there's something that I have to get out of it that is of value, that's going to make me a better trader. The only reason I'm going back and doing literally a full trade audit, studying every single trading day that I've had on the eval and the express funded account, is because I fell on my face this week. So now I'm just extremely motivated to go out there and put in the work and figure out what I'm doing wrong. And I wouldn't be doing this if I didn't fall on my face this week. So I am getting better as a result of my failures, and that's how you have to think of it. And that's why only 5% of traders are actually successful, because only 5% are willing to do this work. The other 95% are going to look at a week where they fall on their face, and they're just going to feel sorry for themselves and probably quit. 5 out of the 100% are going to look at it this way and think, okay, I did something wrong. I'm going to figure out what I did wrong, and I'm going to get better as a result. And that's how I'm looking at this right now. And, I feel good about myself, because I was down for a while. A lot of shit going on outside my life. And I say this in almost every single video, but my girlfriend broke up with me after 6 years. So I just have not been myself. I have not been performing at the level that I know I can perform at. And this right here is a really, really strong motivating factor for me to get back in line, get back in shape, and continue doing what I do and keep being me. Because I can't sit here and just let myself trade like shit. I mean, and just not be who I know I am. And by that, I mean, I've fallen into a lot of old habits that I've killed from the past. I've fallen back into those things, and I'm doing those things again, and I'm just not myself. I've grown out of those things, and I've become a better version of myself, but because of what's happened externally, that's made me fall back into the old version of me. So I need to work my way out of that and climb to a new high. But you can only do this after you've fallen on your face. So again, every failure carries with it an equivalency to success, and I know that I'm just going to use this to make me better, and that's it. So in terms of bias this week, I came to the conclusion that I keep running to the problem of chasing sell ideas. If we look at my biases throughout this week, and I have every single week tagged by what I was looking for going into that day, 5 out of 5 days I was bearish. That's a problem. Only 2 out of those 5 days was a bearish bias actually valid, and it played out only within the context that I could frame a sell setup, because the market was rebalancing the impulse swing that we made earlier on the week. And by that, this is what I mean. Let's just go to a 15-minute time frame. So this is the weekly range, right? Here's the whole week throughout Friday. Monday, we had this push up. Tuesday and Wednesday, a bearish bias was valid only within the context that I was anticipating the market to drop and rebalance the impulse swing that we made from Friday through Monday to set up the next move higher. So bearish bias worked on Tuesday, bearish bias worked on Wednesday, did not on Thursday and Friday, but I carried bearish biases going into Thursday and Friday. And that's what killed me in the latter half of this week, because the market made a new all-time high, and for some reason, I'm still looking to be a seller, mainly because we have this right here. And most of the time I see this, my eye keys up on that, and I view that as low resistance liquidity because there's no solid discount rate for the market to grab onto here. So more often than not, it tends to run that out in one quick, clean move, like a sudden drop that we have like this that we did last Friday. So that's what I've noticed from this week. If we go back to the weekly review, I'm going to open up a new tab so we can keep this chart. Let's go to the weekly review. So in terms of bias, my eye keys up on sell side or low resistance sell side from the overnight session. I see that and immediately lock onto it. Bit of a typo there. Thinking bearish because my moves aiming for that have paid me the most. So again, if we go to reports, open up another tab for this. If we go to playbooks, we can see that my bearish premium gap opening setup has paid me the most, right? This one's the most profitable, $1,400 in profit. But look at my win rate, it's only 33% on that. So that's what's paid me the most. And so whenever I look at a chart and I see low resistance sell side like this, and I see the market opening up high on the day, and we have a premium gap opening, we've gapped up from where we closed yesterday's regular trading hours, I tend to look to fade that and look for that low resistance liquidity run from the liquidity presented in the overnight session. And that's what I tend to go for. So as soon as I see that, I am locking onto that, and I'm looking for that because it's what pays me the most in the past. The tendency is so strong that I can know the day is going to be bullish because the higher time frame narrative and daily chart, but I ignore that because of relative equal lows or low resistance sell side. So if we look at Monday and Thursday, let's look at this. Two options. Market is just going to keep pumping towards new all-time high after respecting the new week opening gap and Friday's strong close with bullish order flow. Or, this is the second idea I could frame, still in consolidation and potentially reverse, right? But look what I even say after this. I know how this session is going. It's going to be a strong up close day, but I want to play my bearish premium gap opening setup simply because there's relative equal lows left overnight. So I know that it's going to be an up close day, strong up close day, but I still frame a bearish bias and still look to fade it. That's how strong my tendency to want to fade the market is going into the open. Now, if we look at Thursday, it's literally the same thing, right? Again, like the same fucking thing. And I'm not even looking back at Monday thinking there's two ways this can play out. I just did this automatically. Two options: play continuation of yesterday, targeting PDL, assuming the market will now move to the low of the consolidation range, or play a reversal as the market trades into the daily discount wick, assuming Wednesday or today has made the low of the week. This is my bullish idea. So again, looking at both of those ideas, and I go with the sell idea. So yesterday turned away from the all-time high, came back inside the range to finally rebalance the impulse swing. Price still closes inside the daily SIBI. So right here, I'm literally outlining reasons for the market to go higher because of what I see on the daily time frame. Yet I'm still ignoring that and still looking for a bearish bias. Still looking for the break lower at 930. These are the setups that have paid me the most, but I keep going into the market hunting the 930 sell. And you guys know that I'm really, really good at executing on it when it is actually there. But it's grown to the point where I'm looking for this shit literally almost every single day. And that is the problem. That is the problem. Even on the days where I get the bearish bias correct, I'm still going into that session looking for a 930 sell, jumping on it, and taking myself out of the market, taking two losing trades before the sell actually presents itself because I'm trying to sell the market right at the open. And what allows me to do that is the order block. So you can see how these things move in tandem. And I'm starting to connect the dots really, really well. But that's only because I'm literally doing a full trade audit, studying every single trading day, the trade plan I had for that day, how I actually traded, and establishing the correlation between the two. But I can only do that because of the daily process that I do here, which is why I stress to you guys it's extremely, extremely important to do this daily process so that you can go back and connect the dots in your own trading and figure out why you incur large periods of drawdown like I'm in right now. Honestly, this is fun. I mean, let's think about it for real. I'm working my ass off today to figure out what I'm doing wrong, and I'm having a good time. Literally. Like, I'm sitting here, got my fucking hoodie on, got my AirPods in, I'm locked in. I'm not doing anything. I'm just working on this, and I'm just getting better, and I'm just figuring out, okay, where did I go wrong? It's fun. It really is. When you're working on yourself, when you're working on your craft, you're perfecting your craft, getting better at what you love to do, there's nothing better than that. There's really nothing better than that. I don't think I would want to be doing anything else anyways. This is what I would want to be doing. This is it, you know? So, Back to the weekly review. Okay, that's my problem with framing bearish biases and just really, really looking for the sell. I got the bias wrong 3 out of 5 times today. Now, I didn't have a daily review on Monday because Top Step was down because we had that AWS outage, so I didn't actually trade. I just paper traded the market, and I didn't really do anything. But I still came into the day with the bearish bias. So that's why I didn't make a video on Monday, even though there is that daily review on Monday. Moving on to the rest of the weekly review, other things I should highlight is this right here. So the biggest lesson that I learned this week, I'll probably highlight this. Okay. So if you've been keeping up with me, you know that I passed the eval last Thursday, right? But the way that I traded to pass the eval has literally flipped the way that I think about trading, because how I passed the eval, and I'll show you guys from the recording. That was on the 16th, I believe. Let me pull up the recording. This is it. So, a couple of things. First of all, going to the TradeZilla dashboard, you can see that I took 3 trades. And you can see that every single day before that, you don't see a single day where I've taken 3 trades, do you? No, you don't. Up until this point, I have not taken 3 trades. So what did I do? I deliberately broke my max trade rule to get funded, basically. That's what happened. And because of that, and I got paid as a result, now I've trained myself to think it's okay to break my rules because it's worked in the past and I made money off of that. So there's strike number 1. So I took 2 losing trades. I stopped out on this trade. And then I stopped out on that trade as well. Stopped out on both of those trades. And then finally, for a third time, I see what I need to see. Inversion fair value gap, one of my entry models. Take it, and it works. But let's look at how I set my take profit and how I actually ended up profiting from this trade. Literally what I did was I set my take profit at the exact dollar amount that I needed to pass the eval. And then I just set it and forget about it. I didn't take any partials. Didn't try to lock in any equity. Didn't even consider the downside of the trade. Didn't even consider the risk of the trade. Was not considered whatsoever. It was like it didn't even exist. And I just believed with full faith and conviction that the market was absolutely going to give me what I was looking for and pay me. So I demanded that the market give me exactly what I'm looking for, and I demanded that the market pay me the exact amount that I need to pass the eval. I literally I let it play out, and I watched YouTube like a lazy motherfucker, and eventually it hit, and then I passed the eval. No partials, no nothing. The take profit that I set was at the dollar amount to recover the $400 of intraday drawdown that I incurred, which would have been my largest losing day if I didn't take this third trade and broke my rule and take this third trade and pass the eval as a result. So there it is. And I have never, ever, ever seen an equity high since then. It's literally only been downhill since then because the way that I've trading has been completely flipped because of that exact trade right there. Now, it's flipped the way that I think about trading. I'm demanding price give me exactly what I'm looking for and think it's absolutely going to deliver that. I refuse to partial and demand price pay me the amount that I'm looking for. And as a result, Tuesday, I put on a winning trade where I should have made $300, but I refused to partial, literally replicating exactly what I did on Thursday to pass the eval. But this time it didn't work, and this time the market did not reward my greed. I was not content. I was greedy. I wanted more. And therefore, the market took back what was never mine in the first place. So I keep refreshing this trade because the executions are off and I can't find them. So shout out TradeZilla for not working all the time. There we go. So you can see that I take the 930 sell, right? And in this case, it's valid. And in this case, it works. But what do I do in this trade? My take profit is set at a dollar amount. I'm not comfortable. I'm not content with just taking off a first partial for only 30 handles because the previous week, I was used to knocking down these $1,000 trades in a really volatile condition. So when I see a 30 handle partial profit, I'm not okay with that. I'm not content with that. I want more because now I'm used to taking $1,000 trades and 300-point trades because we had that 1 week where the volatility was just extremely absurd. So now I only see a $400, $500 take profit, and I think, oh, it's nothing. And I still want the market to give me exactly that, and I demand that the market give me or reach down into the level that I was looking for, which would be this right here, right? I have my take profit set all the way at this gap, which it did end up delivering later in the session or later in the week. But it never got down there. It came back and stopped me out for break even and then delivered it the following day. So I was not content. I demanded the market give me exactly what I was looking for. No partials whatsoever. Trading the exact same way that I did on Thursday, and what do you know? Winning setup spoiled, okay? Now, instead of literally cutting the drawdown in half because I lost $600 on Friday, this would have been a $300 trade if I just was content with the market gave me and just got in, got out. I would have cut the drawdown in half, and then maybe the trade that I took on Wednesday I wouldn't have been influenced to take the trade off early on Wednesday out of fear of incurring more drawdown. So finally on Wednesday, what happens? Pull the trade off early. Why? Why would I ever do that? Let me refresh this, get the executions right. They're still not right. Still floating in the middle of nowhere. Shout out TradeZella. Still floating. There we go. Okay, so you can see that I am literally top ticking the market in the morning session, which is what I've done in the past. I'm getting pretty good at this. Like, I'm getting really, really good at framing solid trade ideas and being able to execute on them and time them. But one way or another, I'm not able to capitalize on the move. So I literally top ticked the morning session, selling the change in the state delivery as soon as I got it at the right time, at the right level that I was looking for it to happen. But I pulled the trade off early. Because this, at one point in time, was a bold-faced up-close candle, and I'm thinking that this is probably going to stop me out. I don't want to incur more drawdown because I'm already in a lot. I pull the trade off early, and look where I buy back my sell position, and then look what happens afterwards. So that's a pain in the ass, and I could get back in here and try it for a third time, but I know what that's did on Thursday, and I'm not going to. I'm on defense right now. I'm in defense right now because I'm in drawdown, right, and I can't afford to take a third loss, so I just let this one go, let it slip by me, which is fine. So again, this would have paid a lot, and the move that I framed yesterday also would have paid. But don't capitalize on either of those. Now, Thursday and Friday are just simply the issue that I mentioned earlier on in the video where I'm just looking for the 930 sell. I'm looking for the market to go lower, and it doesn't do that. And I'm just absolutely incorrect about the bias. So now I'm studying the correlation between bias, my trade plan, and how I traded for that session. Go to tags, study bias correlation. And I'm trying to connect the dots right here. So this is what I'm working on right now, right? These are the days where I had the bias spot on and I capitalized on that. These are the days where I had the bias spot on, but I made a mistake one way or another, and that winning trade was not a winning, or what should have been a winning trade was not a winning trade. So you can see I did that quite a bit of times. And then these are days where I just got the bias absolutely incorrect and the market ran me over, and I probably traded in that direction twice. So you can see on the days that I get the bias incorrect, I'm taking 2 trades basically every single time. Every trade that we have tagged here, I got the bias incorrect. So you can see that 826, there was 2 trades. We can see that 910, there was 2 trades. 923, there was 2 trades. On the 7th, the 8th, the 23rd, I'm taking 2 and out trades pretty frequently on the days that I get the bias incorrect. So I'm just going back and I'm studying all these metrics and I'm trying to pinpoint, okay, where are my weaknesses? Where am I flawed? And what can I do to fix that, basically? And that's really it. And that's all it is. So am I going to trade next week? I know for a fact that I'm probably not going to trade the earlier half of the week, and I'm just going to wait for the solid trading days, which, if this data does come out, would be GDP and PCE. I love trading GDP and PCE because those days are extremely volatile and really, 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 really clean. FOMC, I'm not going to trade, obviously. So even if I was trading, I'm not trading Wednesday, and I'm probably not going to trade the day before FOMC. It's probably going to be shit, and then Monday has no news driver. So Monday, Tuesday, Wednesday, probably going to be ass. Thursday and Friday could be good because it's after FOMC comes out, and we may have GDP and PCE, but it says tentative, so it's probably not going to be released. So what I'm going to do in the meantime is just take this time to really, really study me, myself, my model, and just really dial things in because, like I said in yesterday's video, the screws are loose and they just need to be tightened, right? But it's not that everything is going to shit and I'm blowing up and I suck at trading and I'm not consistent. kind of hit me. Kind of hit me later yesterday in the evening, and even today, that I'm just not handling the loss well, because I've been in periods of drawdown before and I've worked out before, and I have taken really, really, really fucking good trades, and I can do that shit again. It's repeatable. This was a really good trade. This was a really good trade. This was a really good trade that I botched. This was a really good trade. And this was also a really good trade, although I violated my rules to take it. And then if we look at the last month, again, so many solid trades that I've taken. I've taken a lot of solid trades. So there's no reason for me to be down on myself and believe that I can't do this and can't make my way out of this. And think like this is the end for some reason, because it's really not. All I have to do is keep showing up, keep doing the same thing that I've been doing, but be aware of my weaknesses and where I'm flawed and what has really, really been dragging me down. And that's what I'm working on to figure out right now. So my head is still up. I'm still good. I'm still up for the month, although barely. Right? But just keep going, keep moving forward, keep studying mistakes. And that's it. And that's all it is. That's all this game is, bro. This shit's a fucking roller coaster. But you got to be really, really good at handling those losses. And I watched a video yesterday from Larry Williams, who mentored ICT. The mentor of my mentor. Pull up the video right now. What is it? What is it? What is it? What is it? It's on Titans of Tomorrow. So I recommend you guys watch this as well. From, what's this dude's name? I forget. Fuck. This guy is solid though. But Larry Williams, watch this video. He made 11,000% in a year, and he was risking 30% in a trade. How do you do that? Well, Wakar, that's his name. Wakar asked him, how do you do that? It's like, you take your losses and you move on. Literally, that's it. So take your fucking losses and move on. It's just an account. That's it. So that's it for this one. I don't even know when I'll talk to you guys next time. I don't know if I'll post a video on Monday, Tuesday, Wednesday, Thursday. I don't know. So we're just going to keep moving forward. That's it.